Are you looking to invest in the Perth property market and want to use a local buyer's agent to help you secure your next investment? Mitch and Sam are the co-founders of SJR Property Group, a buyer's agency based in Perth that specialise in helping investors build property portfolios that outperform the market. Check out www.sjrpropertygroup.com.au to book in a free discovery call and chat with a local buyer's agent today.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone. Welcome back to a brand new episode of the Smart Property Investment Show. I'm Grace Ormsby. And if you've been listening for a while now, you've heard me say time and time again that speaking to investors is my absolute favorite part of this job, getting to talk to people that have walked the walk, and not only just that, but then they talk the talk. They share their investment journey with us. They give us the tips, the tricks, the things that you shouldn't do because they've probably done it and it turned out very, very badly. There's nothing better than learning from our peers. And it is an absolute pleasure to be welcoming back a guest today who has previously appeared on this show. You might remember him if you have been a long-term listener. He was on the episode Turning 10 Properties into 22 Properties in under 2 years back in 2022, and he's done a fair chunk more since then. It is an absolute pleasure to be chatting with Bharat Patel. Bharat, welcome to the show. Thank you so much for coming back on.
Hey, Grace, it's my pleasure to invite me in the show. How you been?
I've been good. How have you been? I feel like, it was both a long time ago and really the blink of an eye that we last chatted, and so much has been going on for you and your portfolio by the sounds of it.
Absolutely. Look, I think it's nearly 2 years since we chatted. And since then, I was disappeared for a reason, because if you remember in the last episode, I was mentioning I wasn't stopping where I was. I just wanted to do what I wanted to do. And to tell you the truth, I have achieved what I wanted to achieve. So basically, back then in 2022, I was in IT sector, working full-time job. I quit my job now. I turned my passion into reality. Now I'm a full-time buyer's agent. In 2 years' time, from 22nd property, I built my portfolio up to 30 properties as well. And to tell the truth, using those properties that I purchased pre-COVID from 10 to 22, and after, I use so much equity so that I just have a zero balance in my house that I live in. So I basically use investment properties equity to pay off my $1 million house in Sydney. And I also started my business as well.
Living the dream. Bharat, congratulations. That's such an awesome achievement. And it's what so many people on their property investment journey do set out to achieve, not that financial freedom, but a mortgage-free property.
Exactly right.
Pretty
And
amazing.
that's my aim. Remember when we chatted in 2022, it was a bit hard time, tough time, you know what I mean? But my goals were clear, right? I wanted to exit the matrix. I say the matrix, 9 to 5 matrix, where you go 9 o'clock, come back 5 o'clock. So I just wanted to achieve something using the equity from the property. And my goal were clear, right? Me and my wife decided it at one day, if we can pay off our $1 million mortgage in Sydney, great. You can't go wrong. That's it. And I achieved it. And I don't mind to share a few tips to my investors. And as I said, now I'm working full-time buyer's agent. And since I started my buyer's agency, I also closed nearly 170 deals in last 20 months for my investors. Few of my investors purchased 2 properties, 6 properties. One investor purchased 12 properties in 6 month time as well. So I am using the formula and strategies that I used for myself, tasted and tried. And I have so many clients who want to achieve the same thing what I achieved.
Wow. How does it feel to have exited the matrix?
Very excited. When I looked my numbers in 2022, I had that much debt. But look, 2 things I learned. Most of my property inflated in a value so quickly, so faster. I was not expecting that much. But then when I did everything in terms of the valuations and equity and whatnot, it was excited to mention that most of the properties inflated, and that's how they made me millionaire. So inflation is my friend. If you buy the right property and inflation can do the magic, you can't go wrong in Australia.
Do you think it helped? We've obviously seen a huge amount of inflation over the last couple of years post-COVID. It has felt like a very interesting time in property. Do you think luck is definitely not the right word to use, but it was a product of a very unique set of circumstances?
Absolutely. Look, I still believe a little bit of luck, but to tell you the truth, it was all strategic planning, right? When we chatted in 2022, I was buying property and I keep wanting to buy property, but then I was carefully planning my servicing. Most of the investors or people, they begin something somewhere, but after having two, three properties, they always stuck. Why? Because they don't understand what property needs to be purchased first and second and third and so on and so forth. Few properties you have to purchase to make banks happy, to keep banks happy, I would say, right? Few properties you have to purchase for your emotions. But to tell you the truth, any property that I purchased, I keep the emotions within myself, not thinking emotionally at all, and then buying property so that one property can motivate me to buy the next property and so on and so forth. Because my goals were clear to use investment properties equity so that I can pay off my home that I live in.
Is it easier said than done to keep the emotions out of it?
It's not easy. Look, when a very good question. When I was investing, my wife was obviously sort of with me on every single purchase. I still remember few properties she did not like, right? So for me, any property, if it clicks the numbers, I'll buy it. I don't care about much. Either it's in Sydney, not in Sydney, in Brisbane, not in Brisbane, wherever the property is in Australia, as long as the numbers work. And if I can think the market is going to move up there based on so many quantitative and qualitative factors behind that particular market, I'll go and buy the property. So sometimes I have to convince my wife to keep her emotions aside as well. And then at the end, I could have convinced her and we did it together.
How much of it is between you guys a real partnership? Because you keep saying we, and it's obviously been something that you have both worked on together. How much do you approach it as that we are a partnership, we are going through this together and we're going to work out what we need to work out and all the goal setting? How do you sit down and do that?
So look, to be honest, my wife is my best friend. It's a good relationship. We always opened up. We always have a similar goals, similar interest, similar things that we want to both achieve at a young age. So to tell you the truth, every time when I was looking and sort of researching the market, I'll educate and heads up before I bring something in front of her so that she's expecting. Then we sit down in front of property. We go through everything, not only thinking about that property, we always think about what can be achieved from that property to the next one. So it's all about knowing yourself together. Then you think about that property, but instead of putting your emotions on that property, we think for the next movement, right? So that's exactly helped me to convince her so that we can both visualizing ourselves for our bright future for myself and my kids as well.
Yeah, it's a good way to be looking at it, to still, you can still have the emotions involved, but if you keep the emotions one step ahead, then they're not going to be really impinging on those individual property purchases, are they?
They're not interfering you, and it all depends on the strong mindset. Look, there are so many things, so many strategies, so many tactics, tricks in property investments, but everyone is different. So instead of you hearing someone else's strategies, you need to know what your mindset is and how strong you are, how exactly you want to navigate your future so that you can do one step at a time. But that step is so powerful that can give you the next opportunity. So you can confidently navigate your journey regardless of the hurdles, hassles. You just achieve your goal. So for us, instead of focusing on our hurdles, we always focus on our long-term goals.
So much wisdom already, and we're only in the first segment. Don't go away, everyone. Stick around after the break. We will be hearing plenty more from Bharat Patel. See you on the other side.
Are you looking to invest for a big return, but are unsure which suburb is up and coming and guaranteed to give you the most bang for your buck? Smart Property Investment and Pure Property Investment have unveiled the Fast 50 report for 2025, identifying the suburbs backed by research that are giving investors the highest returns. Don't make any investing decisions until you read the free report. Visit smartpropertyinvestment.com.au to download the report.
Welcome back to this episode of the Smart Property Investment Show. As I said from the outset, I love chatting with investors who are not only walking the walk, but talking the talk, sharing their insights, their experiences, their wins, their losses with us. And Bharat Patel is one such person. Bharat, last time you were on the show, it was called Turning 10 Properties into 22 Properties in Under 2 Years. Go check it out if you have not already. But we're back with an update almost 2 years down the track. And you've done so well since then, but can we rewind a little bit just for those that maybe do need to get back up to speed? Maybe they listened to the episode a long time ago. What was the makeup of that original 22 property portfolio last time you were on the show?
Yeah, so basically, if you talk about those 22 properties, in terms of those properties were foundation properties, solid, good growth, initial affordable properties where anyone can rent those properties. And those the main things. If you can buy affordable properties, then anyone can rent your property. So I was relying on tenants to pay off my mortgage. So in terms of the number makeup, last time when we met, my portfolio was sitting around between 7.5 to 8 mil grossly. But after 22 property, it was a bit difficult for me because of the challenges in point of servicing point of view. From some banks are not lending to me, some are saying this much LVR I need to buy and this and that, but I did not look back. I just keep purchasing one property after another property after that as well.
Where were some of those properties? Can you give us a little bit of a rundown on locations?
Yeah, so look, after 22, I just changed my strategy a little bit, right? Because obviously, once you have 22 properties, for you, it's pretty difficult in terms of going through XYZ bank and ask for a loan for your 23rd and 24th property. And this exactly I was thinking about ahead. So basically, I started from buying my SMSF. So basically, we just set up self-managed super fund. Me and my wife had a decent amount in SMSF. So my property number 23 was from SMSF. Again, I personally buy few properties after that. Then we added few from SMSF. So between 23rd to 30 properties, I have 3 properties that I invested from SMSF, one after another, slowly but steady, right? In a way where we not sort of need to bump up too much our SMSF. But at least I can use every single cent from SMSF to invest into property because I have done my maths and calculations, and I think I can't go wrong if I invest from SMSF as well. So that when you buy from SMSF, your personal servicing is not going to be sort of impacting too much, right? Because as you know, it's a bit different when bank calculate those servicing for your personal SMSF. So in between SMSF, few properties I purchased through my family trust for the tax saving strategy. Lately, I was purchasing property where basically no one is wanting to purchase, but I know exactly because those properties are at the bottom cycle. There is a movement coming up very, very shortly as well. So I was using the market momentum in a different way to buy properties under different entity names.
Okay, so you got very clever, basically. I'm sure you have an accountant, a mortgage broker, like who is working with you to work out these decisions and work out how you can take the property portfolio to the next level?
Look, to be honest with you, I was in IT. I was not a mortgage broker. I was not a financial planner. But since childhood, I'm really good with the numbers in terms of the real number and how it works. And obviously, I have a team now because I'm doing full-time business as a buyer's agent now. So I have a good people who I connected for last 10 years. And those people also obviously help me out to understand when I reach to certain level in terms of my property portfolio, bank will not lend me money, right? So I need to keep working on my servicing. I need to change my strategy. I need to increase my income as well. So everything was like planned ahead of thinking maybe 1-2 years so that when the time comes, instead of having question mark, I know exactly which way I can use so that I can reach to my destination. So it's like highway at 110 from one A destination to B destination, but sometimes you have to take the routes to reach to that destination anyway. So it's all depending on your strong mindset, and basically it's like a proper planning from day one to achieve that.
So how are you, I guess, how far ahead are you thinking and planning? Is it 1 year? Is it 18 months? Is it 2 years? Is it 3 years down the track? Like how far ahead does that all look?
That's a good question. Look, I don't have a crystal ball. But to tell you the truth, at least I look at 1 to 2 years ahead in terms of the market, in terms of the economy, in terms of the jobs, in terms of the recession, in terms of everything. I'm a good reader in terms of understanding the economy news around the world. So I spend a lot of time understanding the different country economies as well, so that I can start thinking about what can be next in Australia, right? For example, we are at the top of the top cycle of the interest rates. But interest rates are coming down. I'm telling you the truth. Very, very soon, right? A lot of people are not thinking how soon, but I'm very confident in before end of this year or maybe early next year, interest rates are coming down for sure. So I can predict few things based on a lot of research, a lot of data, a lot of statistics, and then I can sort of decide the way moving forward.
There is clearly a lot of planning, a lot of numbers, a lot of data going into what is going on in your head at the moment, Bharat. Can you give us some insight into where those properties have been that you have bought into the SMSF and the trust over the last 2 years? Because it has been a very interesting part of the market. We saw some very big gains coming out of that first part of the pandemic, and then a lot of markets doing a lot of different things after that. So I'm curious where you look to put your money.
Absolutely. Look, to tell you the truth, every property that I purchased in during the pre-COVID, they nearly gone up 30 to 40% already, right? I predicted the market that time back after that, like my SMSA property, I have three, as I said, they all are in Queensland. Why in Queensland? Because they are really giving me good rental yield. So basically the purchase price is less than $300,000. I know it sounds difficult, but you can still find them. The rental yield is over 6.5 to nearly 7%. And I'm very confident that there are only few affordable markets in Australia where you can find those below $350,000 property. So the way I think is one day will come where there is none of those property available where you can search in real estate or domain, so that I'm putting my money in those market, so that I'm very confident in next 5 years time those market will double as well, right? Because where can you buy those property? Only in few places, right? So if you're smart enough, you can buy them now. And last not least, the reason I'm buying those properties in those market, because if you think about it, current rental crisis, you can't find anything in Australia. Everywhere, less than 1% vacancy market across the country. Building is in the crisis. Builder can't build the houses. Builders are getting bust. There is a enormous pressure on the existing market. So to tell you the truth, one tip I can give to everyone: if you find anything below $500,000 now, I'm talking about the houses mostly with the land, and if you find a tenant to rent it out quite easily in those tight vacancy markets, you can't go wrong without thinking too much, right? And that's exactly, I was using the simple maths and I purchased those property from SMSF. After SMSF, I purchased few properties in a major capital cities, because now I have 30 properties and I just still want to build, but now I just want to change my strategy or thinking style into maybe development phase, so that I'm purchasing few properties with the large land bank, so that after 2 3 years time I can go and develop them. I can convert from one house into duplex, or from one large land into three individual houses, and so on and so forth. So it's mix and match strategy to help me to get more cash flow, right? That can improve my servicing, and I can also keep buying properties as well.
There you go. It's clearly at that point of just that maturation of your property portfolio at this point, Bharat. We're going to take another break there, but don't go away, everyone. Plenty more insights still to come. See you on the other side of the break.
G'day listeners, Sammy Gordon here from Australian Property Scout. If you're loving all the property investment content over here at SBI, you will love the Scouting Australia podcast. Hosted by myself alongside my good mate and experienced investor Jimmy Ibrahim, we unpack everything from real investor stories, mindset hacks, and a massive amount of property investment strategies and much, much more. Check us out over at the Scouting Australia podcast and take your investing to a new level.
Welcome back to this episode of the Smart Property Investment Show. We are joined by Bharat Patel, who has given some awesome insights into how he has built out his 30 property portfolio. If you haven't already, go back and check out turning 10 properties into 22 properties in under 2 years. That was an episode we did back in 2022. And Bharat, we've clearly gotten to the point now where you're you've got a very mature property portfolio. And I want to ask you some more about how you kind of transition now into that development phase. But before we do go there, how much is your portfolio valued at the moment?
Look, I haven't done recent valuation because, as I said, I was a bit busy buying properties. But I'm definitely sitting around 11 mil in
Yeah.
terms of overall portfolio position.
Wow. And what's the LVR looking like at the moment?
Look, I'm sitting at around 60% LVR.
That's pretty good.
I
A lot
think
of
so.
people would love to be in the position that you're in right now, but it has clearly been a product over a long time period of persistence, hard work, knowing the numbers and knowing everything so well. And I'm curious, you mentioned a bit earlier on about the sort of data points that you are looking at and how you make your decisions basically. And we've already chatted through price points being a big one. And then the vacancy rate is clearly another big one for you. What are some other things that you do look at to make sure that it is a surefire bet each time that you do purchase a property?
Good question. Look, the mostly sometimes we look at those vacancy rate, absolutely how many building approvals are coming up in that area. So I don't buy somewhere where there will be thousand of homes available in next 2 years, because then who will rent my house? Because there will be many choices for the tenants. On top of that, the most important factor for the last 2 years is the migration, because since COVID disappeared, right, and the borders are open, we can see there are a lot of migration is happening across Australia. There are a lot of people are moving interstate, right? So what we're doing is we matching those data of how many people are, for example, moving from Sydney to Queensland for better lifestyle, how many people are moving from Sydney to Adelaide for getting their permanent residency, how many international students are coming, where are they going, how many of them are renting and whatnot. So basically, on top of this, we also look at the strong internal migration and international migration as well. Because look, at the end of the day, you need to understand the market where population is also consistently moving up. And we, last not least, we make sure in some markets where there are less builders, and those
Mm.
builders can't build the houses because of the rent, because of the material shortages, or because of the price is significantly higher in that particular area. So that if you have less builders in those particular area, your existing house will be always in demand.
How do you find that kind of information?
Look, migration, obviously, government data backed up by a lot of immigration agencies, top tier. They can sort of release the reports based on what they're doing as a business, and we just match with few other agencies as well. Regarding the builders and stuff, again, government data, you can know exactly how many builders in that particular area and what are they doing and what not, so that we know exactly if we choosing a market, then we know how many builders in that particular market and how many of them cannot build the projects because of so much price increased, right?
Mm.
And we target those area early, so that when you buy into early stage at the bottom cycle, our intention is to buy and hold until you move out from bottom to mid or higher cycle, so that you can suck out as much as equity initially, which can help you to buy the next property. So the intention is not buying one property and then question mark. Idea is to buy one property in a way where that property can help you to buy the next property, and then so on and so forth. And this is how I was doing when I was building my portfolio, and now I'm doing for my clients. So I'm in a sort of everyday routine to find out those factors for my clients to purchase the affordable properties anywhere in Australia.
A master investor at work. Bharat, just before the break, you did talk about how you're transitioning now into a more development phase of your career. And clearly, because I'm calling your property investment portfolio a career, because it's taken on that kind of life, which is such a cool thing to see. Developing is obviously very different to just buying and holding properties and renting them out to people. How do you change? Does it feel like a different mindset for you to be going from buying and holding and looking at all those things to now going into that, okay, this is what we're thinking land banking, at that land banking stage, this is what we need to think about when it comes to construction, this is what we're thinking with subdivision. Like how is that mindset different for you?
Look, it's absolutely different. Like development is a dirty game. I would say dirty because there are so many factors are reliable. Buying existing property and rent it out it's quite easy compared to doing the development projects. And that's the reason I have not done any development for my last 30 properties. Why? Because firstly, you need to set up your foundation base, right? Because you can't just go and start developing from first property. So many things can go wrong and then you can screw yourself in terms of the position. Now I have secured my base because my foundation base was like residential properties. Residential properties are more secure because obviously you can easily rent it out and without much obligations. Now that giving me enough cash flow, that giving me a good foundation, so that for me it's easy to move into the development phase on my own properties. Because when I was purchasing few properties, I was purchasing because of the development reason, right? Because I knew exactly one day when I come into that position, I can start thinking about something on that particular property. For example, if it is a corner house without any easement, easy to knock down that old house and put two houses, right? Or if it is something large house, and I know exactly if the zoning is also changing, I can go and do the subdivision and put three houses and so on and so forth, right? So it's all about setting up your foundation first before you move into the development phase.
What's the appeal then of going into the development stage if it is that dirty game, so much harder to do?
Look, it is appealing me because at the end, I love the construction as well, along with building the property portfolio. And now I'm at the stage where I'm thinking if I have to develop my own, yes, there is a risk, but little risk. If I have to develop someone else's land, there are so many factors I have to contribute. So in a way, I don't want to do my development business, for example, in the future, but at least I want to try and experiment on mine first. And that's exactly appealing me to see how excited that might be if I can do a couple of projects by myself.
There you go. So last question for you, and that's kind of around where to from here. We've obviously talked through development is kind of the name of the game moving forward, but you're at 30 properties. How many more, like what is the end goal for you? Is there an end goal? Is there a target you want to be hitting?
Look, there is no target to tell you the truth, but what I believe, I found two things, right? Cash is trash, cash flow is king. So what I want to do is I have learned two things for last 15 years. No matter how much cash you collect in your bank account and lock it your account, after 10 years, it will be not enough because of the inflation. If you use your cash into the property asset can bring you more cash flow. You can maintain your lifestyle using cash flow. So at the end, to answer your question, if I can have 100,000 maybe in my account instead of putting into my XYZ account, I be thinking, how do I invest that $100,000 somewhere else so that something can be come into my account every month? Because at the end, every month, you don't need $1 million cash in your account, but you need maybe 10,000 spare money to spend on your lifestyle, for example, on top of your everyday expenses, right? So that's exactly, if I have money, definitely I will invest more in asset, maybe different class of asset, from residential to development to maybe commercial or maybe block of units or something like that. But definitely it will be asset for sure for me.
Right. It's been so wonderful to chat with you. I feel like we've barely scratched the surface, but we've gotten to the end of this episode. I'm already looking forward to the next update from you, seeing how many properties you get up to next time we chat. Good luck with all the developments and what's going on in that space. And I'm sure we'll hear more from you very soon.
Thank you so much for having me.
To everyone who is listening along, we hope you have enjoyed this episode. Like or review us on whatever platform that you do listen to your podcasts on. If you have any questions, editor@smartpropertyinvestment.com.au. And please reach out if you are like Bharat and have an investment portfolio that you are willing to share with our audience. Some tips, tricks, guidance. It all is appreciated here. Make sure you're subscribed to our newsletter if you have not already on our website, and check us out on social media, Facebook, X, LinkedIn, and Instagram. Until next time, stay safe and well wherever you are listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Feeling trapped by rising interest payments? Escape from mortgage prison with expert refinancing assistance from Finny. We have helped hundreds of borrowers break free from higher loan repayments by finding a more suitable loan. Our expert team can quickly assess your situation, and if there's a better lender available, we'll find it fast. Don't delay. Call today. Speak to a Finny mortgage specialist on 02 8866 2444 or visit our website at www.finny.com.au.